there we go. Want to let everybody know that at the end of the day, when we're done with our presentations, we will be inviting questions regarding individual stocks or anything else if we don't know the answer. If it's outside our specialties, we will refer you on. But we look forward to answering questions. I know, David, I have a lot of fun taking those fresh looks at the stock that the folks put out there. And I know you do, correct?
Absolutely.
And so, well, David and I have been really enjoying these Friday afternoon get-togethers, and I think we've locked on, as we said last week, to a good time to do them is at 1:30 in the afternoon, just after the market closes. David is from All About Trends. You can their website is www.allabouttrends.net. And I'm with the Active Trend Traders from the activetrendtrading.com is our website. So let's move across here. We do want to remind everybody that we don't come with any recommendations about what to trade, and we also say that all the materials that we present here are for training purposes only, and that traders should always practice paper trade, any new method, prior to actually risking personal capital. I want to remind everybody of one more thing, is that with any successful trend trading or trend following system, basically it's based on 5 pillars. The system will tell you what to trade, when to enter, when to exit, and help you with what strategy to use, and then with expectations. And it's important to know your expectations. We build our pillars upon the study and knowledge that we develop through the years. And I like to do 2 different strategies based on my system. One is income generation, i.e. cash flow, on a weekly and or monthly basis, and then capital growth. And so with that, let's move on over to, let's see what the markets are telling us this week. We'll jump back here to the week was kind of interesting. We were anticipating last week that the market was going to find some stability and maybe settle out a little bit. However, as we got close to the end of last week, we found ourselves right back up DJ, let me check. You should be seeing my screen, should see the charts. David, can you see the charts?
I can see him just fine.
Okay. Okay, looks like the majority of folks can. What we found last week was basically on, we were right up at a support level, a resistance level, and sure enough, we pulled back off that resistance level. On the S&P, where did we go? We went right back to the 50 and the 20-day moving average, and then we get a little bit of a rebound on Wednesday, Thursday, and it's holding the 50. The 50 is still moving in the up direction. The concern I had through the week, David, was basically that we were getting such a huge divergence. While the S&P and the Dow were holding up very nicely and just kind of meandering but holding that 50-day moving average, unfortunately, both the NASDAQ and the Russell seem to be falling apart. And we saw a lot of the stocks in the Russell and the NASDAQ that were in fact following suit. One of the things, I read a very interesting article earlier this week that perhaps there is a correction that's going on inside the S&P in that over 50% of the stocks that are in the S&P have actually corrected more than 9% since the market went into correction several weeks ago. And so the S&P is being held up by the likes of like Apple, the larger stocks in that indice. We'll take a real quick look here. As again we say, we've held the 50. 50 is still sloping up on the S&P, and so we would anticipate until we get a close and a break below the 50, We'll just anticipate the a trend to continue higher with the S&P and the Dow. We've got a level of resistance up here just above 1890 that needs to be broken to get further into the uptrend. Until we get there, we're going to be stuck perhaps in a range, and we may flip back and just go horizontal with this range. The S&P continues to work within this expanding top, and so that is still in effect for, and that's typically a bearish type of pattern, but we'll have to wait and watch that over the next week or so. The thing that really surprised me today, David, was how well that we actually, let me turn my phone off here, that we actually, the NASDAQ and the Russell appear to have found some support down in this support zone. And one of the things as I was reviewing these charts earlier, is this swing low right here that happened about 2 weeks ago appears to have held. Thus, if we do break out above either this high here or this high here, we would be in fact back into an uptrend. But, and it's always a big but, we've got this downtrending resistance line here, and also the moving averages. As we get this rebound from Wednesday, as you can see, where did we turn around? Right at the 8 and the 20-day moving average, which when a indices or a stock does that, when they are in a downtrend, it reflects the internal weakness that's in that particular entity. We've got this is where we broke out of the uptrending channel that we were in for a little bit over a year. We've come back up to that, kissed it goodbye, fallen, but fallen directly back to a level of support. And I'll point out to everybody is yesterday, for those of you who like to invest or use candlesticks in your technical analysis, day before yesterday we get a hammer. That's bullish. Then we get an inverted hammer, which at the end of a downtrend is also bullish. And now we get a complete bullish engulfing pattern of yesterday's candle body, and that is also bullish. And so the market may be trying to tell us something, but we've got to get through the 8 to 20, and with an anticipated run maybe up to 41.50 if we break that downtrend. Last but not least, and then we're going to get into the some of the stocks and some of the Dave's got some really good slides. I've got a preview of them, and they look really great. Excuse me. Similarly on the Russell, we get a hammer on Wednesday, and we sure enough get a break up above that. But where does it turn around? Right at the 200 and at the 8-day moving average. It reverses and falls back down yesterday, but stops at support. And then the day's candle on yesterday's candle is called a piercing line. Not quite a full engulfing pattern, but you can consider it to be a bullish signal. The other thing that looks very interesting is we maybe get in for a short-term, let me get my pencil back, a short-term turnaround is we do have the stochastics and some of the indicators appearing to come up out of the lower reversal zone where the oversold condition exists. And so we'll again see what happens next week. This was a positive way to end the week and to end Friday with a good bullish candlestick bodes well for next week. But we have got, I'm not going to say it's going to go into a huge uptrend. Maybe it's just purely a sucker's rally, David, to bounce back up to either this trend line or back to its different levels of support and resistance. This yellow box up here is my magic fib box, tracing out the 38 to the 62 retracement level from this high to this low. And so even if we came back up close to that and then reverse down, we may get some more bearish setups. until this, because the last thing that I look at is, of course, the 50-day moving average now has really pointing down, and it looks like it might, if we continue on next week, break through the 100. And so we've got a lot of overhead resistance to get through before both the Russell and the NASDAQ are back into uptrend mode. So what do you think, Dave? Are you ready to go long?
We'll see about that. So that was
Okay.
actually a great analysis.
So awesome. I got a real quick, folks, if you're typing in your questions, I'm going to switch over to David now, and as David is doing his portion of the presentation, I'll be answering your questions as quickly as I can type. David?
All right. Well, thanks
You
a
have
lot,
the
Dennis.
time.
Thanks a lot, Dennis. That was really great. Really great. Last week we talked about the market firming up, stabilizing, but we were at a resistance level, and sure enough, that's what happened. We rolled over from resistance, and at least the NASDAQ did, and that took many of the growth stocks lower again. But we, as you noted, we did find support where we should, and the S&P is really only one big day away from a new high, and the Dow's only a few points away from a new closing high. So maybe the NASDAQ will get its act together next week, and I would assume then the Dow or an S&P or both would be back in the new high. So we'll see. But we also talked about how there was a lot of good patterns for the first time in the 7 weeks or 8 weeks we've been in this correction. We're finally starting to see some really good patterns show up, and those patterns broke up this week, and they paid us nicely. So that was really nice to see. It was nice to be able to put some money back into the market because we had some good quality setups to trade from. The other concern though about this week is energy. The energy stocks were doing really great, and you think, well, if we're going to go to new highs, this might be the group that's going to lead us higher. But they were next on the market's hit list, and many of them got smacked this week, and I'll go through one of those in this presentation. So let's see here. There we go. Just to back up, when you're in the stock market, there's really only 3 things you need to know, just to keep it simple. You need to know uptrend patterns and how to trade them, downtrend patterns and how to trade them, and then how to be on the lookout for changes in trends, either from up to down or from down to up. And that's really all you need to know. It's really that simple. And the rest of it is just finding the patterns and doing what the patterns tell you to do. So we've been dusting off this book here by William O'Neill, How to Make Money Selling Stocks Short. And on page 39 of that book, he describes the anatomy of a short sell. And you can see we have a stock that's in a nice uptrend that crashes through support, and then it makes a series of attempts to rally back before it rolls over. And we saw a lot of that happen this week. So in downtrending markets or stocks that are in downtrends, the pattern that we trade from, the only pattern you really need to know are what we call pullback off lows. This is exactly what O'Neill was describing here. A stock that's broken support and has pulled back off of its recent lows up to an area of resistance, and then it breaks to the downside. So Jazz Pharmaceuticals is an excellent example of that. It's basically a 4-step process. Step 1 is the initial break through support. Okay. Step 2 is when it eventually rallies back to an area of resistance. Step 3 is when it breaks the pink line to the downside. That's where you initiate your short sell trade. And then step 4 is my favorite part, taking profits. And in this case, we took profits as it hit support at a recent low, and it was near the 200-day. And I think it actually closed at the high of the day, I think, is how it ended up closing. So with these trades, you got to take your profits when you got them. When they break, you take the trade, and you make sure you cover when it tests support. Don't try to get too cute, because we're in a market right now that seems to be a little bit range bound, and you got to take your profits when you have them. Palo Alto Networks, another great example. This blue box here is the initial break of support, or we call it the first thrust down. Then you have your snapback rally, and as shown here in this pink channel, and then the break to the downside. and your initiation of a short trade is the break of the pink line. Same thing with, I have no idea how to pronounce this company's name, but UBNT. Same thing.
Ubiquity.
First thrust down. Oh, there you go. First thrust down, snapback rally, and then bombs away on the earnings announcement. And that's really it. It's really that simple. It's just looking for stocks that are breaking down from uptrends. You don't short them right here because you don't know if they're going to find support here and keep going. You wait for the snapback rally, and then on the break below the pink line, that's when you initiate your trade, and then you cover down at support. For uptrending markets, it's the exact opposite. We're looking for stocks that are in confirmed uptrends above the 50-day moving average and have pulled back in an orderly manner. We don't have a lot of those right now because the market has been so washed out. So the example I have for you is Google. Now this could also be described as a change in trend trade. Where it's been locked in this downtrend for quite some time, and it's come down here. It's hit a double bottom, twice, and is bouncing off that. And all that's left is a break above the pink line to initiate the long side trade. And you could even take it, here at support. But for me, I prefer to wait for the confirmation. But you could do either one. But if you do take it at support, you need to realize that. It's a little bit riskier than waiting for that confirmation. But anyway, the concept is you have a stock that's locked in a downtrend that's finding support at the same level and is ready to, looks like it's ready to break higher above this pink line, which would do so in tandem with the NASDAQ hitting support. And Google is obviously a big NASDAQ name, so it's very logical to assume that the NASDAQ will find support here, and as it moves higher, this stock will move higher with it. So that's kind of a change in trends from down to up. Change in trends from up to down is basically defined by the double top. A stock that's in an uptrend comes in, hits a double top, and then breaks through the trend line, and that's your step one of the short sell trade. GLOG is a perfect example. We've talked about this the last couple of weeks. Here we have a stock in a well-defined uptrend, made a double top, and then today it broke down through the trend line. Now we're not going to go short it here because it's still above the 50-day. It could easily still find support and keep moving. Could be carving out a new base. We don't know. So what we're going to wait for is to see if it continues to fall here and then eventually finds support and creates one of those snapback rally bear channels that I showed you earlier, and then we're going to short it on the break down from that channel. This is also a good example of the 8% rule. I mean, do you really want to wait to take an 8% loss when it clearly broke through the 50-day, or it's clearly broken through the upward trend line? I mean, in this market, I would make my stops a lot tighter. So the other thing is, here is a classic example of the uptrend pattern that I was talking about. A stock that's in an uptrend above the 50-day, pulling back in an orderly manner to support at the trend line and the 50-day moving average. And it triggered here, but that was a long time ago. That was 16 and a half or so, and here we are up at 29. So to expect it not to go through some sort of correction here, particularly in this market, would be short-sighted. So we're just going to wait and see what happens with this one. But the double top, that's your early warning sign that the trend may be changing, at least for the short term, and that you should be looking to take profits here. So what do we do as we look to next week? The market's still pretty weak on the NASDAQ for sure. I mean, we're still not seeing a whole lot of strength in leading stocks, but we still have some really good patterns here. All the patterns that I went through, we have an abundance of those in our newsletter right now, and we're getting paid nicely from those. So I'm never really this big promotional guy, but if there's ever a week for you guys to take a look at our 15-day trial and trade in tandem with us and see everything our paying subscribers do for 15 days, this is really the week to do it. There's some great setups, and we're very confident we're going to get paid as these things trigger the trades. So that's about all I have, Dennis.
David, thanks a lot. It's really interesting. we trade, we both trade the trends, but we do so in a slightly different way. But it's kind of interesting. I always love how the systems kind of merge a little bit from the aspect of I'm looking at several of the same stocks you guys are looking at, but my triggers are slightly different. But it's I always love it how the similarities, but also the differences. Because I'm a big candle guy. I love to trade candlesticks. But as far as I look for my big moves off the moving averages, support, resistance, and all that type of thing. And so let's see what are we going to. Okay, if you want to hold your thing right there. One of the things I just want to remind folks of, David, could you go back to the slide that shows, you called it the snapback rally? Dave? Of course, I can't see your slide, but I mean, I can't see your slide because
I muted myself, so sorry about that. Yeah, let me go back to it.
Yeah, one thing that hit me, snapback rallies, so on snapback rallies. And as you can all see, it's after it's already busted down through the 50-day moving average. Is the blue line the 50 on your charts?
Yes.
Dave? Okay. It's broken back down to 50, and then it gets back down to a level of past support that you can go back in time and see where that support comes from. And we call it a snapback rally. And that concept of a snapback rally can be somewhat misleading if you only think about this, because you think of a snap, oh, it's going to be done in a snap. Well, as you can see, a snapback rally may take several days and or weeks until that snapback actually does get back up to a level of either resistance for taking a downward trade and or support for taking a bounce trade off the moving average, or when you're breaking out of the from a new low, or from a high to low. So we call it a snapback, but that snapback may take several days to develop. So keep that in mind. The key point is patience, patience, patience.
Yeah, that's why, when we first entered the correction, I was saying, hey guys, cash is king, because we needed time for the setups to really materialize. And
you betcha.
Now, 2 months into it, we're seeing that now. And so now it's time to start putting some capital back to work.
And the other thing that's really neat about trading the trends, and I think you guys have probably found this also, Dave, is that if you are a trend trader, you don't have to be looking at the market every day per se, because if you see something that's in a snapback rally or a relief rally back up to former resistance, you can estimate approximately how long it's going to be before it gets up there. And I think you took 2 weeks off, didn't you? You went to the beach or something? While you were waiting
exactly.
for the setups? Cool.
Yeah, it worked out perfectly. Just the perfect timing with spring break and the kids being out of school, and my wife works at the school as well, so that worked out perfectly.
That's awesome. No, I really. So let's see. We have got. Yes, Jerry, I trade EFTs. Yeah, I trade both EFTs, stocks, and options. My favorite EFT is TNA. I try to stay specifically at trading the index ETFs, because a lot of the other ETFs just provides a lot of noise or emulates what the markets are doing. So let's take a look. David, can you see my screen now?
Yes, Dave? I can.
Okay, cool. Folks, I want to say thank you very much for we're not stopping, but I'm going to stop the recording so we can keep it to a short. But we're going to answer a couple of questions on a couple of stocks before I stop the recording. But then we'll still be here for about 15 to 20, half hour after we're done to answer questions that anybody might have. And so we had, David, your favorite stocks, I know, stock. Somebody's asking a question about Apple.
Oh, boy. Yeah, I mean, this one's, I think, that's like I said last week, it's been surprising to me because I just think Apple's dead in the water. It's going to be another one of those Microsoft Dow stocks. But, it's pulling back pretty nicely here to, a former resistance area, so which should now act as support. So give it a couple more days and we'll see what it's made of.
Yeah.
It's definitely setting up what could be a nice pullback off highs uptrend pattern.
Yeah, I agree. It's pulled back up from the high here. It has dropped the 8-day, but this breakout level about 571.88, 572 looks to be where its more sound support would be.
Yeah, and by the way, I used a very bad word, and that word is think. We don't trade what we think. We trade what we trade what we see, not what we think, hear, or fear. And just because of what I think doesn't matter. All that matters is what the chart's doing, and it's pulling back in a nice orderly manner here. So
yeah,
we'll see what it's made of.
Without a doubt. Then we had two stocks this week that reported earnings. One, we have the tale of two tapes on this one. We've got, let's see. Oh, I'm mad at this company right now because the motherboard on my Keurig coffee maker went out this week, and now all it does is pour water.
You're kidding. I thought those things were indestructible. I have one of these. We beat the crap out of it every day, and it keeps on ticking.
Well, clearly I've got to take it outside and beat the crap out of it. That's what's needed.
Yeah.
This was a nice move on Keurig, on GMC, GMCR. Yeah. Really nice move. But it looks like it may be moving up towards a pullback. But I like to find these stocks like this, David, where they've just they've been on a fairly significant, little downtrend, but then a controlled downtrend. Look how nice and controlled it is. And then it basically comes into a level of support, and it just happens to be this is halfway down this gap up window here, which is an area typically of fairly strong support. We get the bounce on earnings, but I love to find these stocks where the 20 is just broken above the 8 that are acting as powerful, and I'll sit and I'll watch this and wait for a potential pullback to the breakout area and then a bounce. But I never try to fade. Like some people will try to fade this where they'll put it in order to buy it at 100, let's say. I never like to try to fade those because oftentimes faders do fade because it hits 100 and it just keeps on that way.
Right.
Wow, how'd I do that?
I think, the Google example I have is pretty similar, very long pullback. You can make the case for QIHU as well.
Yep.
I'd like to see Google kind of settle down here a little bit near these lows, and like GMCR did, but it's definitely got that prolonged downtrend, and with the market being so close to support and it being a big NASDAQ name, odds are looking pretty good here. Yeah,
the one thing I like about, the other thing I like about Google is not only have we found support, oh, I didn't do that, did I? Not only have we found support down in this area here, which is very nice. We've got the downtrend here coming here. But what I like about it is if we do bust back up, this is the 200-day moving average. I think it almost cleared the 200 today. But if we bust back above that and get past the 20, it's got room to rumble, to hit some various, especially if you're an option trader. Yep. It's got some really big, it will have a nice big track to run on before this 50-day moving average gets down in here, where it could bounce there and drop back down. Or it could start hammering the 50 and start twisting it back up.
Yeah.
So, cool. Let's see, we had a question on one of my favorite companies. Tesla disappointed on earnings, David.
Well, I mean, they actually beat. It's just that they didn't beat by enough. I guess everybody was expecting more. So what can you do? that's the environment we're in right now. You know,
Yeah.
where things are, particularly stocks like Tesla that have had such a big run up. You've got your price for perfection for sure. And even if you are perfect, we're just in a market where they're still taking profits on the momentum names.
Yeah, without a doubt. One of the things that I really find very interesting is here was the day after earnings. It announced on Wednesday night. Here's Thursday. I loved how this candle finished. This is a inverted hammer after a downtrend, which is typically a bearish signal, David. And look where we're at. Yep. Right at the 200-day moving average. I'm not saying it's going to. I'm not going to say it's going to move back into its uptrend from there, but we could get a nice little healthy relief bounce before it decides whether it wants to drop down again. But I find that very interesting. That's where it stopped dead in the water, right at the 200-day moving average, which is cool.
Yeah, and it actually bounced pretty nicely off the initial earnings. I mean, it went from what 180 to 192 or something in an hour.
Oh yeah, it did.
So I mean, it was a good short-term trade for sure. I mean, and that's kind of where there's a lot of good trades right now is the pops and drops off earnings reports. Just kind of doing the opposite of whatever happens. If it's tanks, you buy it, and if it pops, you short it. And just get it a few points and be on your way for the day.
Yeah, I agree wholeheartedly. I mean, there's
a lot of that happening out there.
Yeah, and with what was going on with that today, I was looking at this 50, and we did wind up a little bit positive. This was a bullish signal for me on the inverted hammer, David. I nibbled and I bought a little bit today, just a little. And
we have some too. We have a long position in it as well with one of our products.
And so we're looking at that. Again, for a potential run back up to. Well, even if it only runs under 195 time or 200 and then rolls over, that would be a very good 2-3 day gain. So let's see, Jazz. Were you in Jazz? Oh, you guys were in. You got to tell me about this trade in Jazz, man. It was so good.
Yeah, Jazz was absolutely beautiful. So we had the first thrust down and keep going down here. And we had the snapback rally, and then it broke. I think it was Wednesday. Yeah, it must have been Wednesday.
Yep.
And then they announced earnings, and boom, see you later. So yeah, it was a nice 8%, quick little 48-hour 8% gain for us and our subscribers. So that's it's just a perfect textbook trade. I mean, everything I showed you with the O'Neill short sell setup anatomy there. Jazz couldn't have been you take that page and you take Jazz and you put them next to each other. It's carbon copy, and it just did everything perfectly.
Yeah, and one of the things, David, is that I love that book on the O'Neill book. You're talking about how to make money shorting stocks, and from my aspect in the technical stuff that I've studied over the years is just this reversal of roles. Once something is violated, whether it is a support line, when it's violated, then it becomes a resistance. Well, the moving average, I love the way the moving averages work in the same way. And here's that thrust back. This is a thrust back rally you're talking about, yeah?
Yeah.
Right here?
Mm-hmm.
And where does it go? Right to the 50, and then starts putting in some bearish candlesticks, pops back down through the 100, stops at support, and then gives you a second chance. And then I think you guys put out your alert on Thursday on this, or Wednesday?
Wednesday.
Wednesday. Yeah. So that would have been right here on my red arrow when it was pointing down. Cool stuff. So,
yeah, hey and there's still good setups just like this that haven't broken yet, and our watch list is full of them right now. We're just waiting for them to break. So they're still out. It's not like that game's over. It's there's many setups right now, and there's others that are still forming, just need a little bit more chart time.
Yeah.
So
one of the things that I see a lot of folks do, though, David, is one, I'm going to